What's going on YouTube? In this video, we're talking about Elf Beauty, ticker symbol ELF. Year to date, this company is up 84%. Course of 1 year, up 171.5%. So Elf Beauty, they provide cosmetic and skincare products under the Elf Cosmetics, Elf Skin, Well People, and key soul care brand names worldwide. So Elf stands for eye, lips, and face. And so they do obviously their cosmetic skincare products. It sells its products through national and international retailers and direct to consumer channels, which include e commerce platforms in the United States and internationally, primarily through distributors. So, one big key component to this company that I read up on was that it looks like they make their products over in China. So that's how they're able to have a cheaper product than the competitors, and they make pretty dang good money off those products, as we'll see here momentarily. So our revenue, gross profit consistently growing. Our net income a little choppy, but hopefully starting to head higher, which would be very good, and it looks promising for sure. Gross margin trending higher as well. We're almost 70% gross margin. Net margin just shy of 15%. Very good. We can see it's if you draw a trend line, I would consider this an upward trend. Has a little humps and dips in there, but overall trending higher. Very good. Revenue and gross profit year over year change. We can see growth, I think, is just beginning at this company, based on what we're seeing here. Explosive growth in the last 12 months, and really, it's still had pretty good growth prior to that. I mean, right here, not so much, but 2022 and then into the trailing 12 months, the growth over at this company is exploding. Return on invested capital is joining the pack at 18.4%. Very nice return on invested capital. Cash to short-term debt, they have finally turned more cash than short-term debt. That's always a good thing to see. That's something I really like to see. Cash to debt. Look at their cash, which is the blue. We can see almost enough cash to cover liabilities. Overall, total liabilities are at 186, cash 143. But we look at our free cash flow. Our free cash flow is at 93. So free cash flow plus our cash, we can cover our total liabilities, which is fantastic. So we have net income to free cash flow over here. Basically, looks like most of our net income flowed over to free cash flow, which is even better yet. Share count dilution, though, we are getting diluted as shareholders on this company, so not a it's not always a bad thing, but obviously you don't really want to see that. It's very common, but maybe this is a relatively new company, so you're going to probably have that. Hopefully based on their current growth, maybe they can eliminate some of this dilution. However, our capital expenditures, look at that. That's nice. They went from 10 million to 3 million in CapEx over the course of time. So almost every single one of these charts is looking very good. The only one not very great is this one, but it's still not that bad. So over here we have three other competitors. We have Alta, EL, and COTY. We have two red flags on ELF. We have operating cash flow is more than net income, which is not true, so it's not a red flag, so we're good right there. Share change year over year, we did see a pretty big change in share count, so hopefully they can control that and reduce that. Market cap, we have EL is the leader in market cap and revenue compared to everybody else. Revenues, gross profit, and income, same thing, except for income here. Altability has the highest net income across the board. 5-year growth rate, look at that. I mean, if this is pretty awesome to see on this company. I think that's kind of why this company, which we'll see here shortly, is trading at a premium, is because of the future growth rate on this company. Gross margin, I mean, right in line with the competition, almost leading the competition. Operating margin, same thing, almost leading the competition, but right in line. Profit margin, leading the competition in profit margin. So that is something that you always want to see as an investor for sure. Free cash flow, uh, not there yet. Obviously, their revenue is nowhere near the same amount as some of these other companies. So if they can maintain their 15+% net income, then hopefully well, really profit margin, so same difference, then their free cash flow will likely follow suit. Return on invested capital, I mean, I got nothing to complain about there. Higher the better, but still a very good percentage for me. The only thing I'm not a big fan of is the PE. However, we can see this growth over this company is going to be pretty pretty substantial. So maybe this PE is very forward looking right now, and that's why it's trading at a current high multiple, richly valued. So Peter Lynch valuation, they give Peter Lynch value gives them a price tag of $102.93 per share. Multiples comparison with our three comparisons we just went over. We get a price tag of $50.19. Our manual PE, we take our market cap minus cash plus debt divided by cash from operations gives us 59, basically 60 PE. So very, very richly valued on that side of things there. We have price to book ratio. Our average is 6.8, currently trading at 11.7, so we're richly valued there. Our PEG ratio currently is telling us it's very richly valued as well. Intrinsic value is sitting at $101.19 on the Grams valuation here, so within current trading range. Discounted cash flow valuation. Analysts have a price or a growth rate on the free cash flow 11%. So I'm going to match their 11%. Their history average growth rate is basically 189%. With those numbers plugged in there, we give a discounted cash flow price per share of $42.87. Down here, Rule 72, EPS current PE 58.4. We have three different sources for an EPS growth rate for an average of 18.73% growth rate. That goes into 72, 3.84 times. That goes into 10 years, 2.6 times. So we get to double our EPS 2.6 times. So we'll give them a 12 for future EPS. That gives us a fair value today of $112.40 per share. Currently, ELF is trading at $102.90 per share. Our fair market value based on the valuations that we just went over, we get $81.90. 30% margin safety, $57.33. Analyst price target of $127.54. So based on what we've seen on the financial side of things, I believe that analyst price target is probably not too far off because they're probably valuing it based on the future growth of this company. And we can see the financials are pointing to higher in this company. So, and analysts have this projected to have much higher growth rate. Plus, the products on this company are cheaper than their competitors, and they're making just as much money, if not a little bit more money than their competitors. So, based on the current economic conditions, this might be a pretty good buy for this company if that is, if that stands true, that their products are cheaper than the competitors, or people, well, women mostly, right? Or at least people that wear makeup are going to be looking to cut some corners and save some money and get cheaper makeup if they need to. So could be a pretty good competitive edge against the competitors if they do have a cheaper makeup that they can still make pretty good money on. So over here at the stock chart on ELF, we've got quite the run up here. We went from basically, I don't 23-ish dollars per share up to $140 per share. That's nuts. But the financials support that, and I I personally really like this company. I wish I wish this was a lot cheaper right now. I wish this was like, 40, $50 per share. I actually wish this was $23 per share because this would be a fantastic. I would have bought this, as soon as I found out about it, really. This is the first time I've ever looked at this company. But we pull back. I think what we got here for potential price action is we pull back potentially to this trend line here, maybe get down to 88 to $90, hopefully less. That'd be great, but I don't know that that's going to happen. We can see on the MACD and the RSI, this has been overbought and is now currently selling off pretty heavily. People are probably taking profits. Analyst price target on this company is, I believe, is $124 per share. So typically, when people see that, they're going to start pulling, taking some profits off the table, especially when it gets to the analyst price target range. So not surprising there that this is selling off. It needs to anyway, based on how much it's ran up. Hopefully, it can get pulled back into this maybe 78, $84 range. That'd be fantastic because I'd probably be a buyer at that range, even though our buy range on this company is $82 for a fair market value. But I think this thing is worth more than what we got for a price target because we are valuing it off current numbers, not future numbers. and we can see those future numbers are going to grow, at least, we're anticipating those to grow quite a bit. So I like this company a lot. I pretty much like everything about it, honestly. So this is something for me that I'm going to be keeping a close eye on. And once we pull back into this range, hopefully we do, I would love to pick up some shares down in this range on Elf Beauty. But that is it on Elf Beauty. If you found value in this video, drop a like, subscribe, comment, and we'll be back later with another stock analysis video.